All right, time to dive deep into bookkeeping. And don't worry, we've got expert speaker here to guide us through the financial maze. I tried to DIY my bookkeeping for a while, but let's just say I'm ready for some expert-level guidance.
Well, you've come to the right place. We'll tackle those bookkeeping hurdles head-on.
Awesome. So for this deep dive, we've got Accounting for Slow Learners, a YouTube crash course that seems surprisingly comprehensive, and Bookkeeping for Dummies, which, let's be honest, speaks to my current skill level.
Sounds like a solid starting point. Both sources emphasize that solid bookkeeping is crucial for any business, big or small.
Totally. But what kind of chaos are we waltzing into if those books are more creative accounting than squeaky clean?
Imagine this, you're trying to steer your business towards success, but you're navigating those financial waters with a blindfold on. That's what poor bookkeeping feels like. You're clueless about where your money's going, how much you're actually earning, and whether you're headed for a profit party or a financial fiasco.
Okay, no blindfolds for us. We're all about illuminating those financial paths. Our YouTube guru, the QuickBooks Dude, dives right into the deep end with the accounting equation. Assets, liabilities plus equity. Is that the magic formula for financial enlightenment?
Think of it as the bedrock of bookkeeping. It means everything your business owns, those are your assets, must equal what it owes, liabilities, plus the owner's investment in the business, equity.
It's like a financial scale that always needs to be balanced. They use this example of a company with $10,000 cash, $20,000 in equipment, and a fleet of company cars worth, say, $5,000. Those are their assets, right?
Exactly. And to kickstart their business, they took a bank loan that's a liability, and the rest came from the owner's own pocket, their equity.
So by plugging those numbers into the accounting equation, you can see if the business's financial scales are balanced.
Precisely. And each business transaction tips those scales, adding weight to one side or the other. Mastering this equation is like learning the language of your business's finances.
And to track those financial conversations, we need a visual aid. Enter those T accounts from the YouTube video.
Exactly. T accounts show us how transactions affect specific accounts. Picture a T debits on the left, credits on the right.
So every time we buy a new laptop, pay an invoice, or receive a payment, we're adding those entries to the appropriate side of the T account.
You got it.
Right.
And it's not just about those individual transactions, it's about ensuring that the accounting equation always stays in balance.
Bookkeeping for Dummies breaks down those accounting basics using a classic example, the lemonade stand. It might seem a bit simplistic, but hey, who doesn't dream of being a lemonade mogul?
It's a great way to illustrate those core concepts. An asset, for instance, is anything your lemonade stand owns that has value. Your pitcher, those lemons, maybe even that little cash box where you stash your earnings.
So if I read my piggy bank for those initial lemons, that's my equity, right?
You got it. And if you're a particularly ambitious entrepreneur and borrow a few bucks from your parents to buy a fancy new lemonade sign, that's a liability.
I'm starting to see how those terms fit together. But how do we ensure we're not just mentally juggling them, but actually recording everything correctly?
That's where that double entry bookkeeping magic comes in. It's like a seesaw to stay balanced. Any weight on one side needs an equal counterweight on the other.
Our QuickBooks Dude emphasizes that debit and credit don't actually mean good or bad in the accounting world, which I find oddly reassuring.
It's a common misconception. They simply tell us which side of the T account a transaction goes on. Remember this for assets. A debit increases the account balance, a credit decreases it. Liabilities and equity flip that around. Debit decreases, credit increases.
Okay, that's where my brain usually starts to short circuit. Why does it seem counterintuitive?
It might seem counterintuitive at first, but this system ensures that your accounting equation always balances.
All right, starting to get the hang of it. But how do we know which accounts to debit and credit for each transaction?
Think of it like a puzzle, but with clear rules. First, identify the two accounts involved in a transaction. Let's say you're stocking up on lemons for your booming lemonade business.
Okay, so the two accounts involved would be my cash, decreasing because I'm handing over my hard-earned dollars for those lemons, and inventory, increasing because, well, more lemons.
You're a natural. You're already thinking like a seasoned bookkeeper. Then you apply that debit credit rule based on whether each account is an asset, liability, or equity.
So if I'm paying for those lemons in cash, I'd credit my cash account because it's decreasing and debit my inventory account because it's increasing.
You've officially cracked the code.
This is kind of making sense now. But what about the bigger picture, the system businesses use to keep track of all these transactions?
That's where we delve into the world of accounting methods. Bookkeeping for Dummies calls it the cash versus accrual conundrum.
Catchy. So, cash accounting is pretty self-explanatory. We record income when the cash hits our bank account and expenses when the money's gone. Simple enough, right?
It's definitely the more straightforward method, making it popular for smaller businesses and those just starting out. But here's the catch. It might not always give you the most accurate picture of your financial performance.
Especially if you're dealing with those clients who love to stretch out those payment deadlines, or if you've got invoices piling up that you need to pay.
Exactly. And that's where accrual accounting steps in.
So under accrual accounting, even if I haven't actually paid for those lemons yet because I've negotiated a 30-day payment term with my lemon supplier, I still record that expense now.
Precisely. It's about recording those expenses when they're incurred, regardless of when the cash actually changes hands. It gives you a more realistic view of your financial health.
Okay, so accrual accounting is like the more detailed, more accurate, but maybe slightly more complicated older sibling of cash accounting.
You could say that. And speaking of complicated, let's talk GST.
The dreaded GST. Even the mention of it is enough to make some business owners break out in a cold sweat.
It can definitely feel like a minefield, but Bookkeeping for Dummies does a great job of demystifying it.
They remind us that it's a 10% tax on most goods and services sold or consumed in Australia. But there are those exceptions. Basic food and healthcare, for example, get to be GST-free.
Exactly. And they even delve into those different reporting methods for GST, the cash basis and the accrual basis, each with its own set of rules and considerations.
And let's not forget those cautionary tales they share, those GST traps. They can trip up even the most experienced business owner. Forgetting to declare GST when selling those assets, for example, or mixing up those bank and merchant fee classifications, those mistakes can be costly.
It highlights how important it is to not just grasp those GST concepts, but to apply them correctly.
Accurate record keeping is key. Both our sources seem to agree that keeping those personal and business expenses separate is crucial. But let's be honest, it's easier said than done, especially when you're caught up in the whirlwind of building a business.
Tell me about it. I've been there. It's easy to blur those lines, especially for sole traders who might be using the same accounts for both.
Bookkeeping for Dummies suggests creating a digital dividing line, a separate bank account or credit card just for those business expenses. It's like having a designated lane for those business transactions, no more mixing up that new laptop purchase with those weekly grocery runs.
And of course, documentation is crucial. Receipts, invoices, bank statements, they're your financial knights in shining armor, especially when tax season rolls around.
If it isn't documented, it didn't happen. That should be every entrepreneur's mantra. But let's be real, all this record keeping sounds like a full-time job. What about those of us who are, shall we say, time challenged?
That's where technology becomes our best friend. Bookkeeping for Dummies is all about automation bank feeds. Bank rolls, they can be a game changer.
Bank feeds sound amazing. No more late-night data entry marathons.
Exactly. Our transactions magically appear in our accounting software. And with those bank rolls, we can automate the categorization of those transactions. That daily coffee run, set a rule, and your accounting software knows it's a coffee expense every time.
All right, that's officially on my to-do list. Automate, automate, automate. Now we're talking. So, we've tackled the basics, the accounting equation, debits and credits, cash versus accrual accounting, even dipping our toes into the GST waters. Feeling overwhelmed yet?
Don't worry, it's like learning any new skill. It takes time, practice, and maybe a few deep breaths along the way.
And a good dose of humor never hurts either. Now, ready to level up our bookkeeping game.
Bring on those next level moves. It's like those video games. We've conquered the tutorial level. Now it's time to unlock those advanced skills and conquer those bookkeeping bosses.
I'm ready to level up. Let's talk about a topic that piqued my interest in inventory counting. It's a whole other layer of bookkeeping, especially for businesses dealing with physical products.
Absolutely. It's not just about selling those products. It's about knowing what you have on hand, how much it costs, and what happens to your financials when those items fly off those virtual or physical shelves.
Our YouTube guide, The QuickBooks Dude, revisits those costing methods, FIFO and weighted average, and reminds us that choosing the right method can significantly impact our financial picture.
It's like choosing between two different lenses, each giving you a slightly different perspective on your inventory's value and ultimately affecting those all-important profit calculations.
So FIFO assumes we're selling our oldest inventory first, while weighted average blends those costs. Seems like FIFO might be advantageous if those costs are rising, as we'd be selling those lower cost items first.
It's all about strategy. And speaking of strategy, let's not forget about those regular inventory checks, those stock takes.
Those stock takes are like those surprise quizzes that keep us on our toes. We better make sure our records match what's actually sitting on those shelves.
Imagine this, your meticulously maintained spreadsheet says you have 100 handmade candles ready to light up those customers' lives. But when you do a stock take, surprise, there are only 97. Now you're on a mission to find those missing candles, hoping it's a simple counting error and not a case of those phantom candle thieves.
Okay, that's officially on my to-do list now. Implement those regular stock takes. Now let's talk about something else that can make or break a business asset accounting. Bookkeeping for Dummies really delves into this, emphasizing that it's about making those smart choices right from the start.
It's about those big ticket items that are essential for your business, your equipment, your vehicles, and deciding whether to expense those purchases immediately or depreciate them over time.
So if I splurge on that top-of-the-line espresso machine for my coffee shop, that's definitely an asset, right? But how do I decide whether to expense it or depreciate it?
It hinges on that asset's useful life. If we think that espresso machine will be pumping out those lattes for the next 5 years, it's a long-haul asset, and depreciation is the way to go. But if I buy a batch of those fancy coffee beans that will be gone in a month, that's an expense.
Okay, that makes sense. But then there are all those different depreciation methods, right? Straight line, diminishing value, they each come with their own set of rules.
It's about choosing the method that best reflects how your asset loses value over time. Straight line depreciation is like that steady, reliable friend, predictable, consistent. Diminishing value is more like that friend who starts strong but then gradually fades into the background. Higher depreciation up front, gradually decreasing over time.
It's a reminder that even those seemingly small decisions in bookkeeping can have a ripple effect on our financials. Speaking of small decisions, let's talk about one that's often overlooked, especially by those new to the business world, keeping those personal and business expenses separate. It's easy to blur those lines when you're caught up in the excitement of launching a business.
Believe me, I've been there. But trust me, those blurred lines can quickly turn into a financial fog come tax time, making it a nightmare to separate those business expenses from those personal indulgences.
Our trusty Bookkeeping for Dummies comes to the rescue with those practical tips. They recommend treating your business finances like those separate but equal kingdoms, separate bank accounts, separate credit cards, a clear demarcation line between your entrepreneurial adventures and your personal life.
It's like having those separate spice racks in your kitchen, one for those savory dishes, one for those sweet treats. You don't want to accidentally sprinkle those chili flakes into your chocolate chip cookies.
And of course, let's not forget about those receipts. There are financial alibis, especially when those tax authorities come knocking. But who has time to wrangle those little pieces of paper? They always seem to multiply.
That's where technology swoops in to save the day. Bookkeeping for Dummies is all about embracing those automation tools that can streamline our financial lives.
Bank feeds and bank rules, those sound like game changers. No more late-night data entry marathons desperately trying to decipher those faded receipts and match them to those credit card statements.
Exactly. Those transactions magically appear in our accounting software, often categorized and ready to go. It's like having a personal bookkeeper who works tirelessly behind the scenes, ensuring those financial records are up to date and those numbers are always at our fingertips.
Okay, officially adding explore those automation tools to my to-do list. It feels like leveraging technology is no longer optional. It's essential for any business that wants to thrive in this fast-paced digital world.
Absolutely. And speaking of thriving, let's talk about a topic that can make or break a business's financial health, GST.
The dreaded GST. Just mentioning it is enough to send shivers down the spines of even those most seasoned entrepreneurs. But Bookkeeping for Dummies does a great job of breaking it down.
They remind us that it's a 10% tax levied on most goods and services in Australia. But here's the catch. There are exceptions, like those essential items, basic food, healthcare, those get a GST-free pass. It's about knowing those rules, understanding those exceptions, and applying those principles accurately.
And let's not forget those different reporting methods for GST, the cash basis and the accrual basis. It seems like choosing the right method can significantly impact our financial picture.
Bookkeeping for Dummies also throws in those cautionary tales, those GST traps that can catch even the most experienced business owner off guard. Failing to charge GST on those taxable supplies, messing up those bank and merchant fee classifications, those mistakes can lead to those dreaded penalties. It's a reminder that when it comes to GST, knowledge is power.
So we've got our GST game plan. We're automating those tedious tasks, and our inventory is perfectly accounted for. What's next on our bookkeeping adventure?
Let's delve into the world of accounts payable and accounts receivable, managing those cash flows, those invoices, and those payments. It's about keeping that money flowing smoothly and efficiently.
Sounds like a plan. Let's get those financial wheels turning. All right, time to tackle those financial titans, accounts payable and accounts receivable. They might sound a bit intimidating, but Bookkeeping for Dummies assures us that with the right strategies, we can wrangle those invoices and keep that cash flow moving in the right direction.
Think of it like conducting an orchestra. Accounts payable and accounts receivable are those key instruments, and our job is to ensure they're playing in harmony.
Love that analogy.
Huh?
So let's start with accounts payable, those invoices that seem to multiply like rabbits, each one a little reminder that we owe money to someone. What's the key to taming this financial beast?
It's all about having a system, a well-defined process for managing those outgoing funds.
Bookkeeping for Dummies recommends treating each invoice like a baton in a relay race. It needs to move through those stages efficiently, from receiving and reviewing to approving, and ultimately paying those amounts on time.
Exactly. And just like those relay races, communication is key. Bookkeeping for Dummies emphasizes clear communication with those suppliers, those payment terms, those deadlines, those preferred payment methods. It's all about setting those expectations up front.
And let's not forget about those early payment discounts that some suppliers offer. It's like finding those hidden treasures in our inbox, a little bonus for being financially organized.
Absolutely. It's about being proactive, managing those payment schedules effectively, and nurturing those supplier relationships.
Okay, so we've tackled those outgoing funds. Now let's shift our focus to those incoming dollars accounts receivable. It's all about collecting those hard-earned payments from our amazing customers, right?
Precisely. It's about converting those sales into actual cash flow, that financial fuel that keeps our businesses running smoothly.
Bookkeeping for Dummies is all about those clear, concise invoices, those documents that should be both informative and visually appealing. Who knew invoicing could be an art form?
It's about making a good first impression, providing those essential details, and making it easy for those customers to pay those invoices promptly.
And speaking of promptly, what about those clients who, shall we say, need a gentle nudge in the payment department?
It's about finding that balance between being persistent and maintaining those positive customer relationships. Bookkeeping for Dummies recommends a friendly but firm approach, those timely reminders, those follow-up calls, just to make sure those invoices haven't gotten lost in the email abyss.
And if those gentle nudges don't do the trick, we might need to consider those escalation strategies, a more formal letter, maybe even a phone call.
It's about having a plan in place, a structured approach for managing those overdue invoices, and ultimately increasing your chances of getting paid for those valuable goods or services you've provided.
All right, we've covered a lot of ground here, from those basic bookkeeping principles to those more advanced techniques for managing inventory, assets, GST, even those accounts payable and receivable. It's been quite a journey. Any final words of wisdom from Bookkeeping for Dummies before we wrap up our deep dive?
They leave us with this powerful reminder: bookkeeping, when done right, can be more than just a chore. It's the secret weapon that empowers us to understand our businesses, make those informed decisions, and ultimately achieve those financial dreams that seemed out of reach.
I love that. Knowledge is power, especially when it comes to our finances. So until next time, keep those spreadsheets organized, those financial goals in sight, and remember, even those bookkeeping dummies can become financial heroes.